Welcome back to Stocklabs for another market recap. 2023 is over. I mean, from a trading perspective, for all intents and purposes, it was over a couple weeks ago. But, we had a short trading week this past week, and market kind of just did nothing. Kind of went up a little bit. Um, but, yeah, as far as performance goes, we had the Dow was up 8/10. Bonds were up 4/10. S&P was up 4/10. Q's up 3/10. Russell down 3/10. So you can see not a whole lot going on. Even the leadership stocks, Nvidia was up 1.5%. That was the best one. Everybody else kind of didn't go anywhere. Tesla slightly weak, Google slightly weak, down 1.25%, 1.5%, but the rest were more or less in line with the market. You really don't want to read into hardly anything that took place this past week. The market finished out strong for the year. I mean, especially the last 2 months, 2.5 months, somewhere in there. I think from from the end of September or something, or the end of November, or the end of October or something, we've kind of gone up, 8, 9 weeks in a row. So um, it's been pretty good. Um, Industry-wise, you can see kind of mixed, everything hugging a flat line. I'm just going to zip through this stuff. Nothing is sticking out on here as far as subsectors. And on the downside, also nothing really sticking out too much. So you can see that it was pretty lazy week for the market. If we want to go back to see how we did for the year in total, since we're done with 2023, the Qs crushed up 54% for the year, and this was never really in any jeopardy. Kind of once the calendar changed to 2023, the Qs started going up. There were a couple choppy periods in there. I think sometime around April, it looked like there was a little bit of a sell-off developing, but never really materialized anything. Kind of went straight up, and then in the sort of September, October area, August, September, October area, it got a little bit choppy, but then once again started going straight up into the end of the year. So the Qs crushed it this year. If you were long the Qs from the start of the year, you basically had no problems. You didn't even really have to follow any of banking, the banking blowups, the various war headlines. Nothing. Qs were immune. So, all the rate shocks. So this was kind of the year of like interest rates and all this stuff. It didn't even matter. So um, the Qs were going up long before the Fed presumably pivoted in the fourth quarter. They had already gone up 45% after 3 quarters, and everything was looking great for them. S&P up 24%. So this is also a very good year for the S&P 500. Now, this index has become very highly sort of concentrated to these leadership Q's names, which is why I sort of follow those Q's names pretty closely week to week. They make up such an enormous part of the market now that it's hard for the index to deviate one way or another. If those ones are going up, market's going up. If those ones go down, market's going down. So yeah, they dragged the S&P up 24%. I mean, that's an outperformance year for the S&P. The Russell finished the year up 15%. It was looking pretty dicey for the small caps for most of the year, actually. And even on an individual basis, a lot of small cap stocks are still sort of smoked from the highs that they had a couple years ago. They could still be down 40, 50, 60% off those highs. And the Dow had a nice year, up 14%. I think the Dow was sort of the least volatile out of the uh, indices, kind of just plodded along. Especially there was a point in either the third or fourth quarter where the Qs had started to get a little choppy, but the Dow was just kind of plugging along and moving higher. So um, ended up doing pretty well, up 14%. And the Russell, all the entirety of this performance came in the last ramp of the year. So um, up until then, it was tough sledding in this space. So pretty good overall. Again, like I said, if you were in the queues, then you didn't have to worry about any of this other stuff, and you just basically crushed it all year. So crude oil is down 5% for the year. Kind of interesting. Back I remember I think in 2022, you were seeing a lot of calls for $150 plus crude. I mean, it got there once back um, a while back, but there were calls for that trend to resume up toward that way, and it never really got going. Got going that much and ended up finishing down on the year. Bonds had a whipsaw year. Like I mentioned, it was kind of the year of rate fears and all this stuff like that. TLT was down big at one point and then went on a huge run to end the year almost flat. It was still a down year for bonds, but I think the rates around 3.8 or 3.9% or something like this was more or less where everything came in to start the year. So we're kind of back to square one, priced out all the rate cuts that are supposed to come, or priced in all the rate cuts that are supposed to come in 24. And if, things are looking pretty good economy wise, we'll be doing some work pricing them back out again and having rates go back up. So there's going to be like a big tug of war again. So I guess we have that to look forward to. If we look at the mega caps, they doubled this year. So this is kind of like I don't know if you want to call it perverse, but these companies are gigantic, right? So their market caps are all $1 trillion plus, and they're more or less double. As a group, they doubled for the year. So usually this is the type of returns you see from smaller cap stocks, but instead we get these type of returns in the very largest stocks. So I don't know if this is a cause for concern, but most likely it will be discussed as a cause for concern at some point. Nvidia was the top performer, up 240%. Meta was up 200%. Now, can't ignore that in 22, these all got hit pretty hard, but they've way more than outdone themselves on the upside this year. So they came in on a low base, and now, having gone up the entire year, the returns look, basically stellar. I would be surprised if you got another 200% out of Meta in 24, but who knows. And as for the overall market, as Stocklabs scores it, we got an overbought signal in the middle of December. Didn't really do anything as far as didn't really do anything as far as causing any kind of sell-off because kind of we've been in this end of year mode where more or less there's nothing going on in the market. But you see the oscillator has weakened a little bit since then. So, maybe once the calendar turns over, you start the year with some profit taking or something like this, from the big ramp that came in Q4. But I don't know. That's just me guessing. So, yeah, I sort of turned this into a little bit of a broad strokes yearly recap. Best sector year to date, industrials 27% on a median basis. Tech only up 9%. NASDAQ, like I said, was up 54%. So tech really lagged the NASDAQ. You could say that that means the NASDAQ rally wasn't that strong because there wasn't much participation. But again, it's a cap weighted index, so it doesn't need broad breadth to go up as long as the right stocks are going up, which are the mega caps. So yeah, our services we also had up 10% for the year. Financials up 5%. No one probably would have predicted that when Silicon Valley Bank was blowing up, and was it I think First Republic was getting bought by J.P. Morgan, and Schwab was having the cash sorting issues and all this stuff. But financials turned out to be up 5% for the year, or 4.5% for the year on a median basis. Material stocks weak. Utilities still weak. Although utilities were making kind of a comeback as the long end rates were coming in. So we'll see if 24 sort of is better to the, let's say, the deflation trade, which is basically utilities, consumer discretionary, and tech. These were sort of the tried and true winners when we were sort of in a period of non-inflation, or I don't know, whatever you want to call it. So we'll see. Let's see if there's anything else I should mention here. No, I think we are good. So we're going to start the year. Calendar's going to change over. It could be a totally different market from what you saw in 2023 or the fourth quarter of 2023. Similar to, in 21, at the end of 21, everything closed on highs. End of 22, everything closed on lows. 2023, just now, everything closed on highs. So there's been a 2-year V bottom kind of in risk assets. Started at end of 2021, bottomed end of 2022, and recovered by end of 2023 now. So we'll see if that flips again starting in 2024, or if we're going to, make some continuation and break the pattern that we were sort of running with. Yeah, that's all from me. Hope you guys have had a good Christmas and a good Hanukkah and a good Kwanzaa for all practitioners of African culture. And I hope you're having a happy New Year, and good luck in the coming year, 2024. And yeah, we'll be there the whole way, seeing how the market's doing and keeping track of how we are doing. So talk to you guys later and get out of here. Bye.